risk management, if you were to define it, risk management is about identifying things that could go wrong in your project or in your plan. So you make certain plans, and there are things which could derail them. So it is all about identifying those. So in risk management, there are certain known risks which you know about, the certain unknown risks which you do not know about. So for example, in financial institutions run huge amount of risks, and much larger than other organizations. We have business risk like any other organization, but in risk management, because we deal with money, we have huge amount of financial risk, and there are known risks like credit risk, market risk, and which are financial risk, and there are non-financial risks like operational risk, cyber security risk, reputational risk, legal risk, so on and so forth. So those risks we know about, we can assess them, we can measure them, and we can try and manage them. But there are unknown risks like pandemic that happened, and that one can never plan for. So what you really need to do is, for unknown risks, you need to provide enough buffer. So how we do that? In financial institution, we have something called capital adequacy assessment process, whereby we measure all the known risks and we provide enough capital for those risks. But we also provide enough buffer for unknown risks. So that's the way we do it. Your second question was, how is it different in FI versus other companies? There really is that risk is very different in each organization. So it's all about understanding the risk and doing things to mitigate and manage them. So one has to look at the case. For example, in startups, you have a different kind of risk when you are at early stage, and you have a different kind of risk when you are at more mature state. So depending upon where you are, you need to assess and manage those risks. But just very broadly, in a financial institution, a lot more about financial risks apart from business risk. But in non-financial institutions, more about business risk and non-financial risks, apart from certain financial risks like funding and capital mix, etc.